Good evening, friends. Market has done really well today, but will it get sustained, not sustained? We have a major geopolitical conflict, Israel, Iran, how it can impact the market, crude oil going up, how it's going to impact the market, what is the state of the world economy, what is the state of the Indian economy, the valuations. These are things we are going to discuss. And one more thing, how normally market behaves in second half of calendar year, that is July to December. So all these things we are going to discuss today in our webinar. So please hold your breath and listen to this webinar very carefully. You will thoroughly enjoy this webinar. But before I begin my webinar, just a disclaimer. This webinar is just to enhance your understanding about the equity market. Please consult your financial advisor before buying or selling any stock. Past performance is no indicator of future returns, and investment in securities market are subject to market risk. So let me begin with the state of the economy. When I say state of the economy, it includes world economy too. And if you look at it, the global growth across the board, everyone has been saying that the global growth will come down. Why it's going to come down? Purely because of geopolitical tension, because of tariff uncertainty. No one has a clear-cut handle on what's going to happen. Number one. Number two, the last mile of distribution is turning out to be more protracted, and that's one reason central banks are not very sure what needs to be done. So, while the global growth looks very uncertain, Indian economy is also not going to do so well. There has been a revision downward, but there is still a strength in the Indian economy compared to the global economy. And when you look at the whole world, and when you look at India seems to be a more picture of a strength, stability, and the opportunity. Why am I saying so? Because if you look at it, while globally either the corporate books are little inflated, when I said it's not so healthy, or banks or balance sheets are not healthy, or maybe the household incomes are little strained, or the government has borrowed more than what they can afford, or the external sector, that is import export. But for India, the balance sheets are very strong, whether it's a corporate. In fact, if you remember in one of the presentation I did mention what has been the borrowings, what has been the operating cash flow of in India Inc. They were presenting very, very healthy numbers. Banks, a lot of credit should go to RBI. More or less, the banks are healthy in India. If you look at their net NPA level, if you look at their provision coverage ratio, I think that gives a clear-cut indication that there is no stress being built in the banking sector. At the same time, households, their books are very, very healthy, and one of the biggest assets the household owns is a gold. And gold has gone up by almost 30% in the first half of 2025. That makes all the more the balance sheet of household very, very strong. Government at the same time has acted very prudently. The fiscal deficit has been managed so well that we don't have, with RBI dividend coming in, I think it further improved. Right now the crude oil price have gone up. Had it remained soft, there was a probability that government would have increased the excise duty on petrol and diesel without impacting the real cost to the consumer. And of course, the external sector looks very, very reasonable. Having said that, of course, we have seen some decline in merchandise export in the month of May 2025, and that I'll come a little later on this one. So overall, and also what is very, very good thing is this time is that there is a political stability in this country. Unlike some other countries where there are challenges, fortunately in India, there is a lot of political stability, and that also gives a lot of comfort level to the investors, not locally but globally also, to look at India as a market. And that's why the word opportunity is a very, very important word to notice on. Demand in the economy seems to be healthy. This data I have taken from RBI monetary policy. If you look at the private consumption has remained healthy. rural demand is steady and urban demand is improving, and that's good, gives us some amount of a comfort level for the Indian economy. As per Nielsen IQ Retail Audit Service, FMCG sales in volume in rural India has improved to 8.7% from 8.1% of March. And when it comes to urban India, it has reported a growth of 4.5%, still much below what it is there in the rural India, but the fact is that it is growing, which should be a comfort factor. Globally, the central banks are not able to decide whether they should give importance to growth or they should give importance to inflation. And due to that, more and more central banks across the world have become more cautious and careful in their policy action. We saw Fed not doing any rate cut, maintaining status quo. We saw Bank of Japan doing that. Yesterday we saw Bank of England doing very similar, and today Chinese central bank also maintained the status quo. But on the other hand, RBI has gone ahead with do the 50 bips rate cut. When 25 was expected, 50 bips it was cut. This was purely not to. So I think the RBI is little confident on the inflation front, number one, and number two, they don't want to take chance and don't want to be behind the curve and support the growth in the economy. That's why they did that. But having said that, do not expect any rate cut. And if it called there is a rate cut, it could be most probably in the December 2025 monetary policy. So now this rate cut has been done. Don't expect more rate cuts. 100 bips already been done. Has it started percolating down to the system? The answer is no. Why? Because it takes time to. It happens with the leg. So I think the most probably the 100 bips rate cut transmission will happen, most of it, by July to September quarter. And that's where you see the benefit or the power of rate cuts happening in the Indian economy. RBI not only did 50 bips rate cut, they also announced 100 bips cut in the CRR. This cut is going to happen in 4 tranches. It's not happened yet, but it will happen. The first will happen on 4th October, second on 1st November, then 29th November, 6th September, I stand corrected, 6th September, 4th October, 1st November and 29th November, and that will be releasing 2.5 lakh crore in the system. That's what is going to happen. If you look at one more good thing which RBI said, that unsecured loan was the major challenge. Now RBI has gone on the record saying the stress in the unsecured loan, personal loan or credit card is abating, which is basically the situation improving. But the microfinance situation continues to remain little elevated level. So in other words, unsecured loan, which was the pain point, and where a lot of banks were going little, or NBFCs were going little slow, I think we should see some strength coming in there. That's what it's basically suggesting. What happens in the second half of every calendar year? Compiled for last 10 years. If you look at it, 2015 and 16, we had a negative returns of the Sensex in the second half of every calendar year. Second half of 2015-16 calendar year. The last time it happened was last year, -1%. But normally, if you look at it, out of 10 years, 7 years, the second half has given positive returns to the market. In other words, we believe that market can give positive returns in the second half of 2025. Having said that, do not expect a rally from July itself. I think market will see some amount of volatility, but overall, second half should be better as compared to the first half. That's what our belief is. If you look at the trade deficit, I think one cause of concern right now is an export data. If you look at the merchandise export, it was $39.6 billion, which has came down to 38.7, so decline of 2%. Even import came down to some extent. It could also be function of crude oil prices. But service exports is doing reasonably well, 9% growth, and import of the services also up by 2%. And due to that, our trade deficit is basically came down to 6.6 billion US dollar as compared to 9.4, the growth of 29% improvement. But both import and export decline, which is not, to be very honest with you, is not a very healthy sign. So if you look at the FY 2026 YTD, we are still, there's a growth. So need to wait and watch what happens subsequent. This could be because of tariff impact that must have been happened. So this, you look at the data, there is a still growth of 3% in merchandise, the 9% growth in services. And because of that, both the segment growing, but of course the deficit basically increasing from 15.1 billion, which was there last year at the same time, to 17.1 billion US dollar in this financial year. Crude oil has spiked, and you can look at it, 80 coming down to 77, 72, 67, 64, and then now up 69. This is month to date kind of a, but if I look at as on yesterday, it's $77.72 per barrel. This is for the Indian crude oil basket. In other words, which is, if you look at it, we are back to Feb kind of a number if this numbers get sustained. So now the question comes, why the market is not basically reacting negative to the crude oil price? There's certain theory which is playing in the market. Many people believe that the Iran and Israel conflict is not going to last beyond a point. One of the reason why is that because China and Russia is also coming out very loud and clear supporting Iran and saying that this should not go ahead. So I think it's becoming, so that could put some pressure on to some extent to Israel also. So, number one. Number two, I think Iran is also seems to be on a discussion table. They want to ensure that there are no more attacks on Iran, and if required, they may be more than happy to sign some kind of an agreement on the nuclear side. So we need to wait and watch. But at the same time, due to the global economic growth basically being scaled down, demand for crude is likely to remain little soft. At the same time, other regions, which is not Iran but other parts of the world, the supply is increasing, and that's one of the reason many people believe that the crude oil price, the spike in the crude oil price is going to remain more temporary than permanent. Despite Russia, Ukraine, Iran, Israel, crude continue to remain below $100 per barrel. In the previous instances, crude used to flare up above $100 per barrel. So I think that's one thing which is happening. And another thing which market is not giving too much importance to the crude oil buy, because we have larger issues to tackle, and that is a tariff issue. तो जब बोलते हैं जब बड़ा प्रॉब्लम सामने हो तो आदमी छोटा प्रॉब्लम भूल जाता है, and that's exactly what is happening right now, and that's one of the reason why market is not reacting little negative to the spot in the crude oil prices. How is the market behaving? The reason I wanted to put this number, look at the Israel. Despite so much tension, the Israel market is up by 5.29% in month of June till now, and bearing few countries indices in green, in red. I think most of them are in red, in green. Sorry, including India and the S&P. So what does this mean is that Iran-Israel conflict doesn't seem to be bothering the market. That's the message loud and clear coming out from this data. And the very fact that the Israel is up by 5%, showing strong, market is somewhere trying to give us an impression that there may not be much damage happening to the Israel, number one. Number two, Iraq and Israel could come to some amount of an agreement in the process. It's a monsoon time. And if you look at till now, the monsoon is below average. So while the overall prediction is that we'll receive very good monsoon, but till now, if you look at except central India and northwest, the monsoon is in a deficit. Like South Peninsula is basically right now -3, and East and Northeast is -15. India is overall till now, till 19 June, is -5%. Despite we received monsoon in the month of May, the southwest monsoon is basically right now in a deficit zone. Is it a cause of concern? The answer is no. Normally we have seen, so July and August are the best month for the monsoon. So if for some reason, if monsoons, even though the June is not so great till now, I think a lot of hopes are there on July and August. Out of subdivision, 21 have received normal or to large excess, while 15 have received deficient to large deficient rainfall till now. It's too early to come to any meaningful conclusion. Idea is to give you. Having said that, Indian equity market continues to remain at a very rich valuation. Right now we are at 27 times. In other words, the upside is going to remain little kept at this point of time. So we need to have some more momentum coming in to take the market to the little high. Having said that, we do expect second half to be better than the first half of 2025. How is the market perform this week? Nifty and Sensex in the green. The large cap is in the green, the mid and small cap are in the red. And that gives you some idea about some amount of risk of coming into the market. And that's why if you look at Nifty, consumption did well, Nifty infra did well, but the PSU Bank, Nifty Metal, Nifty Pharma, they all close in the red. YTD, the Nifty and Finance continue to remain the Nifty Finance and Nifty Bank Nifty continues to remain in the green, while mid and small cap are in the red till now. This is YTD. We don't expect much change happening as far as the small and mid caps are concerned for the rest of the year. FPI have bought something in the last few days, but still in the month of June they are in the red only, 4,192 crore. And overall in 2025, FPI have sold near about 97,000 crore. Let's open the floor. Kiran Sasar is saying this war can get worse, and does it make sense to partially invest in debt or similar funds? If yes, how much percentage and where all? So Kiran sir, I think I have given the reply in my presentation. We do expect market to see the war. We don't believe the war will get worse. In fact, the market is also not reacting the action. On the contrary, market is of the opinion that there could be a resolution happening to the war between Israel and Iran. So we don't expect. And should you invest in debt? Answer is no. So that doesn't. The subsequent question become redundant actually. Please remember, while debt can give you assured returns of 7, 8, 9%, whatever the return it would be, equity will always give you much higher returns as compared to the debt in a block of 3 years. And hence, never ever put more than 3 years or more than 5 years of your monthly expenses in the debt instruments. Because that's more like an emergency fund, contingency fund that we are putting it. Why? Because the inflation would be much higher as compared to the rate of interest the fixed income instrument will offer. In a way, the value of your money will keep deteriorating if you put larger section of your money into the debt instruments. So my answer is, my request to all of you is that please do not switch anything from equity to debt. On the contrary, use every dip in this market to increase allocation to the equity market. Equity market forms bottom during crisis time. In other words, and when you should be putting more money? When things are good or when things are bad? The things are bad, that time you should put the money because you're buying at the bottom. When everything is going right, you should never put money. Why? Because you may end up buying at the top of the market. So my request to Kiran sir, Please do not switch a single rupee from equity to debt. For some reason you have excess exposure to debt, please bring that money to the equity. Sagar sir, hello sir. Do you feel India market will outperform USA market next year in dollar terms? It means in dollar India will give better returns than USA market as of now. CR return Nifty is 12 to S&P 5 9. But when would you deposit US to the 3%? It's almost same place. So advice in the Indian story is better than US may face a issue going forward. Do you feel we can expect better return in Indian market? I'm NRI and for kids study I have to pay in US dollar future onwards. So where would we park funds, Indian market or US market? Sagar sir, I have said in the past and I again repeat loud and clear. Indian equity market will give you higher returns in dollar terms. US will struggle to give returns, but Indian market will give you higher returns in dollar terms. So if your kids are in outside India and you need to spend on the education in US dollar, please rest assured, if you remain disciplined and you are sensible, Indian equity market will give you much higher returns in dollar terms as compared to the US market. So do not do any investment in US market because you have a kids need money for them for the further study. I don't think you will make more money. My sense is that US market may underperform in many years to come because there are structural changes things are happening in the US which will make the US economy weak, and once the economy is weak, you don't expect earnings growth to be strong, and when the earnings growth are not so strong, then you know what happens to the equity market. So my answer, please don't do that. If I would be in your place, I would still bet on India story. Sam, no, my observation, the market almost always recommend stocks which would have moved up to good extent from the recent bottom low. As a strategy, one cannot say it is bad one. In other words, as per when MM rating technical dot is bullish or mildly bullish, other things remain same. Why is this preference? Agreed, no one will know how long bearish or bullish technical trend will continue. Sorry, I have to reread your question, sir. My observation that market almost always recommend stock which would have moved up to the good extent from the recent bottom low. As a strategy, one cannot say it is bad one. In other words, as per when market rating technical dot is bullish or mildly bullish, other things remain same. So it's a question mark you're asking. So I'm getting confused. Why is this preference? Agreed, no one will know how long bearish or bullish technical trend will continue. Okay, sir. Whatever I understood from your question, the way it has been phrased, it will be confusing, but whatever I understood, Sam sir, your question is that why do we always recommend a company which is already moved up? Now, the reason is very simple, sir. You want to be doubly sure that the rally that is happening in the counter is going to sustain. And that's why it has to cross certain threshold to become a buy in the MarketsMojo. Am I right? So my request to all of you is that don't look at how much it has gone up. You should look forward and say how much more it can go up. And that's how you should look at it. Because sometimes when we do rear view diving, it creates a problem for all of us. So please, if it has become a buy in our system, probability is very high that company can become, it can add value to your overall capital gains in the system. So don't worry about how much has gone up. I remember many companies which has gone up substantially, and we still went ahead and recommend those companies and created good alpha for our investors. So I hope that's your question. I answer that question. Tahan says, hi Sunil ji, what is the CGI both portfolio major PMS is launched? So we would be near about, our TWRR would be near about 8 or 8.5%. So why I'm saying TWRR? Because our money keeps coming in every now and then, So the SEBI guidelines says that you are supposed to calculate only TWRR as of this one. It will be 7 to 8% kind of a returns since launch in our PMS. If you don't get same sir, if you don't get LIPO, when is the best time to buy in open market? So sir, there is no standard answer to that. It's all depending upon how good or bad the company is. Am I right? So what I've observed is that, so I don't have any study to that, but I think we can do a study and said what happens to the IPO, the company post listing. If the company is good, please buy the same day of the listing. If the company is not so great, why do you want to wait for the क्या price में आ रहा है? Just leave it that company. Okay, I'll give you a classical example. So I wanted, and this has not happened today because I've stopped applying in IPOs. I remember, I can't remember when did I apply for IPO. In the past when I used to apply IPO, and if I don't get it, and if I like that company, I would go ahead and buy the company on the same day, first day of the listing. And then I don't bother because the company is good. Eventually it will make a lot of money for you. So that's how I look at it. But there is no firm answer depending on the quality of the company, the price at which get listed, and so on and so forth. Sometimes the good company get listed at the discount price, and if that is so, please go ahead and buy that company without waiting for further corrections. But as I told you, Sam sir, there is no what we call straightforward answer to this question. Ankit, future of bank stocks, we continue to believe bank stocks should do well. If you remember, sir, Ankit, sir, our call of 2025 is that the banks, the private sector banks and the NBFC should do well. FFCG should do well. And third sector, we said capital goods and infra. And we continue to believe that these three sectors should do well. And banks is a part of that. See, the reason is very simple. While some names can come under pressure because of a rate cut happening in the market, am I right? But the going forward, I think the loan growth book would happen much better. Unsecured loan, that stress which was there is not there. Banks have started reducing the deposit rates, saving rates, and this and that to protect the NIM and so on and so forth. So our sense is that the banks should do extremely, valuations have become very, very attractive, and that's why we believe that the future bank is very, very good. Again, it's a more domestic story as compared with the global story. So while we are not so bullish on the global growth, and due to that, sectors like IT and pharma may continue to underperform, while the bank is more a domestic story, and if that is so, it should help to, when someone is not doing well, technically that sector can give you more returns. Madhusan sir, why infrastructure sector is not growing? What is your view on the infrastructure spending in the next few months? So my sense is that, sir, infrastructure as a sector should do extremely well. That's what my sense is, that with rate of interest coming down, the what we call there will be a transmission of that rate cut. Most of the infrastructure company basically have good books, good loan in their books, so they will save that interest cost also, number one. Number two, when the rate of interest are down, it does help infra to do well, because the project which was not viable may become viable. So my sense is that the infrastructure spending is going to increase because government will do heavy lifting, keeping in mind the global growth concerns. So my view is very, very bullish on infrastructure. Of course, you have to be company stock specific, but my view is bullish on the infrastructure. Anil sir, in the power series, a pharma company was recommended. That company was down by almost 6% today. Should we continue to hold? And I'm aware that you don't take stock specific query, but since the company was part of the power series and I'm invested in it, hoping that question will be taken up and answered. Thank you. So Anil sir, whatever the company that we mentioned in our power series, as and when we get company, we need to exit those companies, we'll come back to you and we'll inform you. We did that in the past and we'll do for this pharma company also. So at appropriate time, our team will reach out to you and tell you when to exit from that company. Right now, please continue to hold that company. And remember, one day price movement doesn't define that company. So my request to all of you is that don't get too much bothered by this. Just can I just take this call? Just boot pe kar dena. I don't know. Someone is calling me continuously. Amit. Yeah. So sorry, there was a call. Hello, are you there? Yeah. So there was a call, so that's why I had to receive this call. So that's the thing. 1 minute. Let me just message this number. Yeah. Let's take the next question, please. Nimesh Sunil, good evening. Sir, what should be the target? What should be the market target year in 2026, sir? I think bear market is over and new bull market started. Then which are the sector that next bull run? Sir, sector to allow to can you guide the sector? Rest or MarketsMojo will help in finding stocks from that sector. So, sir, I don't think I'll be able to give you some target for the what you call the market for 2020, what we call 2026. But we do believe that banks should do well. We believe that FMCG should do well. We do believe that infrastructure should do well. That's how it should look at it. Next question, please. Varun, sir, you mentioned that Indian market is highly overvalued right now. Then how can we say that 3 years equity will outperform better than the gold or debt? So, sir, I said Indian market is richly valued, and the richly valued can become a reasonably valued by growth in the earnings. So we don't expect too much growth in earnings coming in, even for the June quarter. Even the earnings for the March quarter would be reasonable. But what is going to happen is that as we go forward, the growth in earnings will come, and that will make the valuation quite reasonable. Number one. Number two, Indian market will also do well because of the liquidity is very, very strong, and that will further give the market a fillip. So three things: basically growth in earnings, liquidity, and number three, the strong leadership at the center, and which will make Indian equity a little outlier as compared to other markets in the world. I hope that makes it clear, Arun sir. Harshat, in your portal, you have covered many technical parameters for each stock like RSI, MACD, SMA, Bollinger Bands, but more than 18 months, I'm requesting a special webinar to understand a bit more on these different indicators. Harshat sir, this is the first time I've heard this question. Please raise this query to my colleague Jason. एक काम करना अमित, ये Jason को पूछना करने के लिए. I think we can definitely do that, sir. That's not a problem. This is reference to reply given to Mr. Karan sir. What percentage of my total equity for investment should be in equity? How much I should keep for buying equity at dips? I generally put maximum. I feel that's a mistake. Regards. So, Rajkumar sir, my request is as follows. Okay. One should always do the assets allocation. 3 years or 5 years of your monthly expenses should be put into debt fixed income instruments. Am I right? Number one. Number two, 15% should be in gold and silver. And real estate, depending upon which market, micro market we are talking about, but over a longer period of time, I've seen real estate doesn't give any meaningful returns to the investors. So, and hence, rest of the money should be in the equity. That's how you should look at it. So again, repeat 3 to 5 years into fixed income instruments, 15% into gold, and balance should be in the equity. Please take in as a part of your assets allocation. Please take good mediclaim and also have a life insurance in this. So once you do this, I think rest of the money can go to the equity. That's how I should look at it. And don't try to time the market too much because you will be not successful when you try to time the market. One second. Again, one second. This one, so I just trying to resolve that. Some logistic issue. Yeah. Vinit, do you join companies con call to attend the AGM even now and ask question to the management? How much of the management views hold significance in shortlisting a Mojo stock, giving sell call on the existing Mojo stock? Vinit sir, we do listen to the con call. We do listen to the findings of the AGM. Now we don't attend, but we have a broker partners in our PMS. They send us the note like uh, today we got it from Tata Consumer Products and so on and so forth. So we listen to read that. But does that have an impact on our buying and selling stock? The answer is no. Our Mojo stock score that you see is not get carried away by the what management has been saying. Am I right? It's just a function of what we call the score, the four dots we have: quality, valuation, CFT, and the technicals. How do you see the paint industry? Do you think the legacy player will come back, especially in the new player giving competition to the short-days player? So I think paint industry continues to remain challenging. In fact, one of our PMS customer who tracks this industry very closely has put down on LinkedIn. He said this industry is going to grow and double in next 10 years if my memory serves me right. So the growth is there. The only thing this growth will get divided into various players, and hence probability is very low that incumbent players will be able to retain that market share. So when the new four-wheeler car company coming in, Maruti found it little difficult to maintain the market share. So my sense is that I think the incumbent players will find it a little difficult, and there will be some concern. We know all that one of the companies basically up for sale, and most likely it would be bought by another player. The new players are more aggressive in terms of their strategy, and it's not one or two, three more players are coming in, and I think that the industry competition is going to get more and more tough, and if that's going to happen, the incumbent players will find it very difficult to protect the market share. Okay, NBFC is good or bank is good for investment? Dr. Harish sir, very difficult to what we call, it's all company specific, because I personally believe private sector banks should do well, NBFCs should do well also. But go for the large NBFCs because they have a better wherewithal to do compared to other one. Venkat sir is saying, what is the view on the defense stock? Is the rally company still worth to wait? Some pockets the rally seems to be over. We were holding one of the largest holding was our defense stocks in our PMS, and we locked in the profits. But it's a company specific. But more or less, the defense companies are commanding a very rich valuation. I did presented some data on that. There is no growth in the earnings of the defense companies, and hence at this valuation it becomes a little difficult to justify. I think Jason can read out the question and you can just answer. For clarity, the question can continue to be shown in the screen. Mohan Kumar. Sir, Jason is not there with me. So you can, I have to read the question, I have to answer this one. Jason is not there, sir. Thanks for your insights. Given that banks are struggling for deposits with people moving to mutuals and expected to make NIMs coming down, paying high interest rates for existing FDs, should the bank sector not face pressure? You're right, NIMs will come under pressure for 1 or 2 quarters, but post that, and it's there in the price right now. But the valuations are very, very good for the banks, and that's the reason. So if you look at 2025, in the first half, despite 100 bips rate cut, the banks and NBFCs are the best performing sector. Okay. Could you please give insights into bullish view on the banking? Okay, I think I've answered that question. Done with this. There are no more questions. Thanks a lot, everyone, taking time out. Again, see you next week. Take care. Good night.